I'm here today to talk about NEX Energy Solar Fund. Slightly different beast to what we've heard today. So we've heard a lot of interesting companies. We are a FTSE 250 investment company. So in terms of size, we have a gross asset value of around 1.2 billion. So that market cap equates to kind of about 450 to 500 million. So once again, investment company listed on London Stock Exchange, and those who are familiar with investment companies, we can touch on some of the market dynamics. But really here to give you a really top level of kind of what we do. The business model we use is really simple. We own physical solar assets. We generate electricity from the sun on those solar assets, and then we obviously sell that power and then return the returns to investors in this dividends. There's also another interesting element to capture here today, and probably why everyone here, being a retail investor, is the opportunity. There's a real market opportunity at the moment for our type of investment, especially given there's discounts across the board. We're generating cash. We've got a really high dividend yield. Dividend yield is between 10 to 11%, and that's a covered dividend as well. So I'll talk about how we generate the cash, how we hedging power sales, and give you a bit more kind of insight into the portfolio, how we're going to grow, what we're going to do about the discount. That's not my slide. Don't be fooled by the picture. This was taken pre-kids and pre-renovation, so I've aged significantly since then. Vice President Investor Relations at NEX Energy Capital. NEX Energy Capital are the investment manager and advisor to NEX Energy Solar Fund. Really important to note that one of the benefits of investment companies is you don't have any employees. So you have an independent board which sits above the top. So we've got 5 independent board members, and then you have the investment manager and investment advisor. So none of the complexity around employees there. So brief introduction. NEX Energy Group. So NEX Energy Group is made up of 5 silos, we like to call it. The first one being NEX Energy Capital. So that's where I work from. That's the investment manager that looks after NEX Energy Solar Fund. As a investment manager, we manage about 4 billion worth of solar. We are the world's largest specialist in solar. We don't just look after NEX Energy Solar Fund, the FTSE 250 vehicle. We have private vehicles as well. So I'll give you an example. One of the private vehicles invests into utility scale solar internationally. It's currently raising up to 2 billion. We have another private fund here in the UK which focuses around new build solar. So as a manager, we really get a lot of strength from that specialism. Gives you a lot of buying power in the market. We know all the deals that are going on, etc. So obviously, once you've got a fund, once you've got the assets, we do lots of M&A in the kind of NEX Energy Capital. Once you've got these assets, they tend to have a lifespan of 30 to 40 to 50 years. You need to look after these assets, right? So we've got a separate entity called Wise Energy, and we call that the operating asset manager. So this is the team on the ground looking after the assets on a day-to-day basis. Now you would think solar being so simple, no moving parts, there's not a lot to really look after, but it's really around how we monitor the solar farms, right? So obviously technology has a big part to play, not just in solar, but the software used to manage the assets. So we can talk about that. But Wise Energy kind of looks after around 1,500 solar and battery assets across the world. So once again, a lot of solar. The third entity here is Starlight. Starlight's a relatively new entity to the group. That is the development side of the business. So that does greenfield, brownfield development on predominantly solar, but also in other technologies, energy storage, and some wind in there as well. That's really important for the growth of NEX Energy Group. So NEX Energy Group started in 2007. The development arm is really going to give us, and has given us, the full kind of life cycle of solar. So we've obviously got the funds, we've got looking after them from an operational point of view, and now we've got kind of the feeder and the pipeline additionally into our other pipeline as well. 2 other small entities. One is called Next Step. Next Step is an incubator fund that essentially works with local universities to look at the next sustainable startups. One of the things about NEX Energy is NEX Energy was built on a mission to lead the transition to clean energy, and obviously being the kind of through solar. So Next Step's really interesting in seeing kind of the next emerging technologies coming through. And then finally, NEX Energy Foundation. The foundation is what the group provides at least 5% of its profits to each year, and that foundation works with charities across the world to alleviate poverty through the use of clean energy. Some really interesting projects in like Malawi with around solar lights and education and that type of thing. So, NEX Energy Solar Fund, NESF for short is the ticker. So we're a specialist solar energy and energy storage fund. Don't be confused by the fund because we are an investment company. We like to confuse people. We have a diversified portfolio of operating solar assets. Once again, we own the physical assets. You can go to a solar farm, you can touch the asset. Actually, I wouldn't recommend touching it because it's electricity. But you can see the asset and touch, and these things are generating cash. We're a FTSE 250 company as well. So in terms of size and liquidity, very relevant from a retail investor's point of view. We also have a very diversified shareholder register. So we have institutional investors, we've got wealth managers, private banks, and retail investors. And actually, retail investors now, as part of the shareholder register, even over the last 3 years, have increased from 3% to around 18%. So that's like 90 million worth of shares worth of retail. So this is definitely an investment that kind of pulls the heartstrings in terms of future revenue and also kind of looking at the energy transition. So currently we have an attractive dividend yield. I mentioned that being between 10 and 11%, and the dividend target this year is 8.35p. That financial year ends on the 31st of March. That dividend is covered. I'll touch briefly on our track record around dividends, but once again, it's the reliability of cash flows, how we hedge the energy power sales, and once again, should be a relatively straightforward investment case. As a manager, we're very proactive in driving shareholder value. We'll touch on a bit later on in terms of discount rates and what we're doing, but that's interesting from your perspective because that's the opportunity to invest as an attractive entry point. And then finally, I'll very briefly touch on the growth prospects to continue the evolution because these funds obviously are all about evolution, how you grow, and what's the platform going to look like in the future. So dividend track records, NEX Energy Solar Fund listed on the London Stock Exchange in 2014. So we're coming up to our 10-year anniversary in April, actually. Every year we have paid a dividend that has been covered, and every year we have increased that dividend. And conveniently, it's increased in line with RPI up to this year. As you see, from 2022 to 23, that was 11% year-on-year increase. So we've got that track record of delivering stable returns from investors. And from an investor's point of view as well, this is very much kind of an income play, but there's a real opportunity for kind of the growth and capital appreciation given the discount. So current forecast dividend cover is around 1.3 times. That means that dividend of 8.35p is covered by 1.3 times. And then since IPO, we've paid out 333 million worth of shares, so quite a lot of shares. So not only do we pay a high income, there's a mission behind what this fund does as well. We have 92 assets here in the UK, which I'll touch on. The majority of those assets, probably some assets in your back garden, well, not necessarily directly in your back garden, but within your kind of your local council. And these are assets that are really delivering value to the UK. Right, we need to decarbonise. We need to step towards a net zero future. And solar is one of the quickest and one of the cheapest forms of renewable energy to help us get there. And it's vital to kind of move away from fossil fuels for sure. So we're an Article 9 fund. That probably doesn't mean anything to anyone here, but it essentially means we are the highest level of transparency in terms of our ESG credentials. They call it a dark green fund across Europe. We have an ESG board committee that looks at everything ESG, so even down to the fact that how we source the panels, how we look at all the deals and that sort of stuff. So ESG isn't an afterthought, it's very much integrated into the whole investment process. We do have a standalone ESG report as well, which is worth checking out on the website, and everything I'm talking about today is available on the website, so nextenergysolarfund.com, so please do go and have a look at that. And also we have a leading biodiversity team as well, so natural capital is going to be a very big thing in our sector, and solar farms are the perfect place to look at the biodiversity and the natural capital and how we can improve that. So we've got some really good data coming out of that. The portfolio itself, it powers about 340,000 homes a year with clean energy. That's an awful lot of clean energy, so once again gives you an idea of size and scale. I mentioned we had 100 operated solar assets, so 92 of them being here in the UK, and the other 8 being in Italy. That's an installed capacity of around 933 megawatts. That is growing, which is also obviously nice to hear. We have a commitment into a private infrastructure solar fund called NEX Power Free ESG. That's a $50 million commitment. Really interesting investment this, because this has allowed us and given us exposure internationally. And this is across solar assets in the US, Chile, Spain, Portugal, and Greece. One of the other things it did, which is really interesting, is it opened up a basket of co-investment opportunities. So from a fund perspective, we're able to invest as NextEnergy Solar Fund alongside pension funds, insurance companies, investing into these sorts of assets, which none of our peers can access. So that, from an opportunity and growth perspective, really, really attractive. And when you look at it from a private equity perspective, that's on a no fee, no carry basis. So really attractive terms we can do that on. The weighted average life we've got here is 26.1 years. Obviously, that's a life on paper. In reality, these assets, the technology is always being updated and changed. So this is a shifting point. So I'm not going to run you through this whole graph because I think it will probably take an hour. But essentially, as I mentioned at the beginning, super simple technology, right? No moving parts, solar panels sit in the field, the sun shines, especially here, well, occasionally the sun shines in the UK, but it's not based on sunlight, right? It's a radiation level. So solar uses the radiation, and the UK is actually one of the best countries in the world to have solar because heat is obviously inefficient and you don't want everything to be too hot. So essentially, obviously, the sun hits solar panels, the panels are generating electricity, that feeds into the grid, and we sell via either straight into the market, which we don't actually do, but we also do power purchase agreements, so basically short-term hedging for those power. So we're basically looking in the future and saying we'll sell you X amount of electricity for X amount of price. Obviously everything we make, we then distribute as a dividend. Anything we don't distribute as dividend, we reinvest back into the assets. So once again, with that growth element in mind. We've mentioned in here energy storage because that's a really important part of our future. Energy storage is vital for renewables in this country and the world. As you increase renewable penetration, you're going to see intermittencies in power, and that's where batteries really comes in to kind of help everything out. So really, really important and growing market here. I know battery funds have had a bit of a hard time as of late, but it's super important, and even the National Grid are kind of implementing long-term kind of standalone batteries into their kind of future viewpoints. So you've seen how we're generating obviously electricity from the sun. How are we selling that electricity? We have an in-house hedging team led by an ex-Goldman Sachs commodities trader, and we're constantly looking at how to place slugs of trade against the power curve. So when I talk about power curves, we always use power curves from third-party advisors, and we're always looking to try and outperform those power curves, and that's exactly what we're doing by placing these hedges. What's also important about placing these hedges is back to the dividend. It gives us that visibility on the cash flows. So if the sun doesn't shine, I think the least of the worries of anyone in here is not going to be, are they going to get their dividend? It's probably going to be the end of the world. So strategic growth. So I've touched on the dividend, touched on how we hedge power, a little bit on kind of how we're growing as a platform. So obviously solar PV is the majority of kind of the growth we use. We've got international expansion through NEX Power 3. We've done those co-investment opportunities, so looking at Spain and Portugal. We're doing a capital recycling program, and I'm actually going to touch on this a bit later on when I'm talking about market opportunity, because it's all about recycling capital when you can't raise capital in the capital markets, and this is where, once again, the opportunity is, which I'll come back to. I've touched on energy storage. There's two avenues for energy storage for NEX Energy Solar Fund. There's one on a standalone basis, so essentially selecting standalone batteries in parts of the countries where the grid is highly concentrated with renewable energy. So, for instance, we're building our first standalone battery in Fife in Scotland, where there's a load of wind turbines. So obviously, historically, when the government has paid those wind turbines to curtail, so essentially turn themselves off, we can capture that energy and buy low and sell high, is pretty much the simplistic way of looking at it. We also have the co-located batteries opportunity as well, so separate from the battery funds in the market. We have 92 grid connections here in the UK. We just need to look at getting an import connection, and we can build batteries on site depending on planning permissions. That's a really big opportunity, right? Because that changes how you can shape kind of the power and how you sell that power. As a pipeline, we've got about £500 million. Obviously, there's the question of how do you fund £500 million worth of assets, but we can touch on that in a bit. Historically, investment companies have always been structured in a way where you have a revolving credit facility, which is basically like a student loan if you're still a student, and you'll go to the market, you'll find an asset, for instance, buy the solar farm, pay it off using the RCF, and then go back to capital markets, do a quick tap, raise some equity, basically reload the gun, and that's how you grow, right? And that's exactly how Next Energy Solar Fund kind of has grown from IPO when it raised about 84 million, obviously now sitting at 1.2 billion GAV. Given 5 minutes, this is the kind of the interesting bit around the current opportunity. First of all, solar as an asset class, abundant source of energy. Like there's a really good stat here. There's more solar energy hits the earth in a single hour than what is being used in an entire year. Really powerful stat, right? Obviously, the question is how on earth do you harness that? Solar itself has seen a significant cost reduction over the years, so 90% cost reduction in the past 12 years, which is humongous. So it makes solar the cheapest form of renewable energy and the quickest form of renewable energy to deploy. I've talked about the volatility of solar irradiation, like the variance levels are quite small, so really easy to kind of look at that and plan that out. And also it's a proven and stable resource. Like the technology, that solar itself hasn't really changed that much over the last kind of 30 years. We are seeing new technologies starting to evolve, so the likes of perovskite, which will double the efficiency. But what we have seen is the use of software. So obviously touching on the previous speaker's point is how important software is in kind of the renewable sector as well. It's all about how you're managing, looking at these assets live and making sure they're always up and running, delivering energy. So this is the NEX Solar Fund share price. We are currently trading at a discount. So what that means for those who aren't kind of familiar with the investment company space is we have a net asset value. We value the assets every quarter. Once again, we're not investing into listed equities, we're investing into physical assets, so we only value them every quarter. And what the discount means is the share price is actually trading below how we value the assets and trading 30% below of how we're valuing the assets. And there's reasons for this, right? So the first one is around moving parts. So obviously we've seen over the last 2 years probably the most aggressive rate hike from the Bank of England, which has been absolutely chaos. And I've circled here in red some of the key points when some of those big increases came out. I think the first one actually was when Liz Truss came out with the disastrous mini budget, which obviously shocked the whole market and the desk against it. But what we've really seen is because we're generating cash, the way a lot of the big institutional investors were looking at us is quite similar to how they'll look at the bond market. So looking at the gilts and how essentially the cash profile we have was very similar to the cash prices that the gilt, for instance, the 10-year gilt was offering. And obviously as the yields on the gilts increased, became more attractive, and what we've seen is a flow of capital. Now, really important to note that this isn't just the Next Energy Solar Fund. This is across every single peer in the renewable sector, in investment companies, every single peer in the infrastructure space, private equity space, digital space. So investment companies at the moment are on sale and really good value. And I suppose another important point to make is the historic investor into an investment company is UK based. And then when you see discounts across the whole sector, like we're currently seeing, it's a sentiment of how investors are looking at the UK market. And now at some point, the market is going to be so cheap, like investors aren't stupid. When something is so cheap, the capital will come flushing back in. And when we start seeing, obviously we're starting to see kind of inflation plateau, when we see the Bank of England starting to reduce its rates, we'll see those investors come back in. So that is the opportunity. So at the moment, you're getting a dividend that's covered, but also this 30% discount, that's going to be the capital appreciation, right? Because eventually we are going to be back at a premium because we need to be at a premium to raise capital. There could possibly be other kind of catalysts in this market space. I wouldn't be surprised if there were M&A activity to drive efficiencies. Once again, all these sort of things will move the share price significantly, right? And once again, we've seen investor redemptions as well. So we've had investors who their clients have been pulling money out, and so obviously they've been forced to sell some shares. Constant time. So NESF, a high yield anomaly. Why we're staying at near 11% is so we do have discount control mechanisms as an investment company. They are by the discretion of the board, but we are the only one that has not implemented a share buyback yet. And you can see the share buyback obviously narrowing the discount and reducing the dividend yield here. So current dividend yield is around 10 to 11%. Final point before we open up for questions. Important to look at when you're looking at the share price is looking at the total return, because obviously we're a dividend payer. And if you look, so the darker blue line is the total return. So if you invested at IPO, even given the 30% discount now, you would still have a 40% return. So this, if you're investing into this, it should be part of a diversified portfolio, and obviously a longer term play, right? This is a 5-10 year kind of play. You're holding it in your portfolio. It's an income play, but obviously the upside of capital appreciation at the moment. So key takeaways very quickly. All the information you can find on our website. We have an investment policy which essentially just kind of mandates how we can invest, where we can invest, and what we can do. And then if you do have any questions, my email address is on here, but I'll be outside with other Peter, who works in the investor relations team, to cover any questions you may have. And then, yeah, that's basically it. We've covered everything.
Well, Peter,
thank you very much.